All right. Now, this is another part we want to talk about. So we had these 2 weeks here, and especially this week here, January 9th, where started the year out, continued the year out, and we kind of had like an echo where it really wasn't as strong. But let's say this week here of January 9th. You also need to recognize when your stocks are at the optimal entry, when the market is obvious, and more importantly, when your stock and the other stocks in that sector are all doing the same thing. And in this case, on the bullish side, there was a lot of money flowing in at the same time, and particularly semiconductor stocks. Tech stocks just launched into 2023 and pretty much lifted the entire market. Money kind of shifted out of industrial stocks. I'll show you what I mean by both of these, because I really want you to start to visualize what it means for it to be obvious. And that's actually a clue on what we're going to talk about today. So if we take a look at the market and we take a look at where the S&P 500 was, and we're going to kind of zoom over here, the last quarter of the year, you can kind of see that we're not really rallying past any of these previous levels. The NASDAQ also did not. NASDAQ was actually even relatively weak to that point, right? But the Dow did not. The Dow actually took out all these levels and had much stronger moves to the upside. So the obvious question is, how do I take advantage of that in the moment, not 5 months later, right? That's a big part of it, right? And that's something we talk about all the time in these videos is you need to have structure. You need to have something that's repeatable. So the point that I want to get across is once you have this kind of structure, and if you're not familiar with, I want to pull it up on the screen for you here. If you're not familiar with the kind of structure that we're talking about, it's this. It's actually something that we call the stock market power pyramid. So the first thing we always do is start out with the market, and then we kind of work our way up, because if we get a obvious answer to what's going on in the market, then it makes these other decisions a heck of a lot easier. So we're talking about here and looking at the market, we're basically talking about the fact that the Dow Jones Industrial Average was the stronger part of what we call the big three. So then it stands to reason, if we're working our way through the power pyramid, what is lifting the Dow that is not lifting the S&P 500, and especially in that same time period, what is not lifting tech stocks? And it really came down to, there were a few industrial stocks. So you work your way up and you start to pay attention to industrial, XLI, the industrial ETF, right? And you can see how strong it was for the better part of 1, 2, 3, 4, 5, 6, 7 weeks. You can see now it's kind of lost its bullish mojo. We had some breakouts, but there were easier trades to make. You can see in Boeing and specifically General Electric. Now, this is another big part of trading that I think really, really needs to be a part of your core concept of what it means to make the stock market make you money. Contrary to popular belief, you actually will have much more confidence and time your entries better and not miss those entries when you have a smaller list, which is a big part of what we just discussed, which is recognizing what's known as relative strength, relative weakness, and kind of where is the smart money, the deep pockets paying attention to themselves right now and backing that with real money. Once you understand where the market is, where money's flowing into particular sectors, then it's really just a matter of breaking it down and say, which stocks in that obvious sector are the ones I should be paying attention to. Now, Boeing up over $200. General Electric at that point was only in the 50s, I believe, $48 before it actually took off. Again, just to give you an example of those two stocks. But now you can see that they've actually been kind of sideways, even though GE and GE Healthcare are still kind of holding the bid there. Boeing and a lot of other stocks that carried the Dow Jones Industrial Average higher have now gotten weaker. And you can actually see here on this chart of Boeing, it's actually now broken down after a nice, really nice, solid 7 to 8 week move to the upside, maybe even longer than that. And now you're starting to see some other stocks in that group also break down. So what does that mean, and how do we take advantage of that right now? It essentially means that we just need to step up again Sunday night every day as the market goes on, Sunday for Monday, Monday for Tuesday, and start to have some sort of process for how we're determining, is it obvious and is it still valid? So if we kind of shift on over to those industrial stocks, they were obvious and valid for a while. And if you were in our community, we were pounding the table. And the phrase that we use is belly up to the bar. Belly up to the bar in General Electric. It's moving. Belly up to the bar. Boeing is taking off. Even Caterpillar and a couple of other stocks in that group actually performed pretty well. And we stayed there. That's the biggest thing I want to get across to you right now. Stocks don't break. If they're still obvious and they're still moving in that direction, you're not going to wear it out. Continue to trade it. As long as it has volatility, as long as it has liquidity, as long as it's obvious, stay there. We call it a broken ATM. If you have a broken ATM, stay there. But the second part of that, which is a big part of the daily ticker today, and by the way, if you want to get your own copy of today's daily ticker, you can actually click the link below the video. You'll see a copy in there. You can go to File and Download or File and Copy. Let me actually show you how to do that, just so you can actually take care of that right now. Let me get this off the screen here. So when you go into the daily ticker here, you can go over here to File and either make yourself a copy or either download yourself a copy, because there's a lot of stuff on here, especially the earnings that are scheduled for this week and whatnot.